Just the thing is with day trading on the 4 hour time frame is that it only takes 6 of those candles to make one day. So I feel like you might end up being in your trade for at least, like I would say from the 4 hour, you'd be in your trade for at least one day to probably a week and a half, right? Depends on your risk to reward, depends on your trading plan, many other different aspect. How large is the range that you're trading, or how large is the, like in this picture here, if we're to take a trade back to the downside, because one thing I'm going to mention here, all trends are likely to continue, right? So as we have this area as a low, where we can say that this trend has continued once we get back to this low and exceed it just a little. From then, we're all due respectively to come back up for a retracement, collect a lot of losers, whatever the sort, before having the opportunity to come back to the low and give us a trend continuing confirmation or not. If it doesn't, then it's going to be giving you new highs and showing you that the trend is actually going up. Yeah, and that tells you that, as that is the market structure, like literally the market structure, the raw price. And I always say better to like just actually look at the price rather than use an indicator or something like that, because this is where history stamped itself, you know, like this is truth. There's no indicator, like late math, corruption, any type of detail. Like this is just pure price, right? So if you could just look at it, and I'll make these green and red because that will like just help a bunch. Right, so you see which one's green, which one's reds. The really small ones like this are just filled with indecision, right? So there's green power, bullish power, advancing power in these ones, and a lot of selling power, depression in the red ones, and indecision in the other ones. It's, yeah. So on that chart, on the 1 hour, it would be an uptrend. Yeah, so this is something that you have to remember as well. So there are trends going on all different time frames. So the market is a very fractal thing where I'll just show it real quick. So you know, like, okay, and I explain this as like days as well. Like, you know, you can have a good month, but you can have a bad day, you know, like those type of things are just, they're just different spectrums, right? So here you have price falling on a monthly basis, monthly time frame. Price has been falling pretty drastically, right? But if we go down to a 30-minute time frame, anything like that, anybody that just looks at the chart from this degree without any more previous information will be like, okay, you know what, we're getting a lot of higher high structure here. This is an uptrend, right? We're probably coming back down here to collect some lows, and then we could follow back up to the upside. Now, this is why there's a lot of different ideas in the market, and we have to just be aware that there's so many different people doing different things. You need to know your plan and be doing that, right? And apart from like I said, anybody who just jumped on the chart and just looks at this can be like, hey, this is a higher high, right? This is an uptrend, whatever the case. But this is why I like to go on the higher time frame, have 2 time frames, so I can have that higher time frame view and be like, okay, you know what? Price has actually been falling more than it's been rising. So I'm gonna take that play and look to fall to the downside. Yeah, basically. Yeah, basically just stuff like that. And the market's always going to go between these 2 phases. I always say like the market structure is always going to be in 2 phases, a pushing and a pulling phase, right? So sorry, not a pushing and pulling, like it either trends and then it consolidates, trends to the upside and then consolidates. So I would always say some of your best opportunities are going to be within those consolidation phases, because this is when the market is really building up energy for that push that it will do. And if you like end up Googling or checking the stats, you'll see that the consolidations actually occur for about 70% of the time that the market actually goes on, while these actual directive pushes, whether to the upside or to the downside, only goes on for about 30%. It's like the 80-20 rule that's been applied here as well. So between 30 and 20% the market trends, and between 70 and 80% the market consolidates, just on average, right? So this is why, like I mentioned this earlier, like, you have to just be selective in all your trades. Have your roadmap set up so like, okay, this is my area of interest. I just want to see, so it's a downtrend. This is my area of interest. I want to see price be bearish at that area. I want to see price be red there, basically. Interact with that area and be red. And that would be somewhat of an idea to take a trade. Okay. Just let me know shortly. But yeah, so what else do we have here? So just like from like your question that you asked, as you doing the top-down analysis is what it's called. You start at the top. Make sure you start at the top. You're not starting from the 1 hour or the 4 hour or anything, and then go into the weekly, because like those type of things, very slight, but it can off shift your balance, your bias to where you say, okay, you know what, 1 hour, man, that looks like a good opportunity. I'm going to go to the higher time frame just to justify that reason. Right? Which is not something that you want to do. It's just to be completely plan based, and you are just operating the plan. Whether you take a loss, whether you take a win, you have to make sure that your risk management is safe and in place enough that you can always be there for the next trade, right? Yeah, basically always be there for the next trade.